Big story, Tamanna, on our ticker.
Yeah.
Third term for N. Chandra.
We'll get Vishwanath Nair up on that, who's broken that story. But this puts to rest a lot of, what is happening in the Tata Group right now. It's so difficult to decipher because it's a lot of cloak and dagger and shadows. But at the end of the day, it's all about control. And where N. Chandra lands is also important. So N. Chandra's current tenure ends in Feb 2027. This is part of something which was in works from July, but the Tata Trust has unanimously approved the extension of N. Chandrasekharan's tenure at Tata Sons. Vishwanath Nair, our Mumbai Bureau Chief, joins in with more details. Yes, Vishy?
Right, Tamanna, so there has been this sort of thawing. That's something that we've been reporting for the last, thawing of relationships. That's something that we've been reporting for the last few days. It seems that it's part of this entire conversation now. You've seen N. Chandrasekharan's tenure being extended by another 5 years. This is a historic third term. Typically, the chairman of Tata Sons do not get this third term. But what the trustees felt was that this was essential to continue the events that are happening, the decision making that is happening at the Tata Sons level, specifically on key result areas, key strategic areas like your defense, semiconductors, batteries, even Air India. The kind of leadership that has been going on at Tata Sons is something that the Tata trustees intend to continue going forward. So February of 2027, that's when the new tenure kicks in, and that will continue till 2032. Remember that according to news reports that were reported earlier, there was some amount of debate about whether that position of chairman needs to be split into two. You have a non-executive chairman and an executive MD. However, it seems that they've moved past that entire debate and have decided that Chandrasekharan continues as the executive chairman of Tata Sons, as the final decision maker at Tata Sons for another 5 years after his tenure ends. This is crucial because it's coming at a time when questions about Tata Sons listing have been making the headlines. We saw last week the Shapoorji Pallonji Group release a statement backing the listing once again. Of course, a decision has not yet been arrived at. The Reserve Bank of India is the final deciding authority on that matter. What we understand is that internally the group does not want to be listed. However, now there are views maybe to go a little bit easy on that decision and maybe look at a potential listing. Nothing of this nature has yet been decided. It's all at this point in time conversation. We'll of course find out whether Tata Sons finally lists or not. A lot of it will also depend on whether Shapoorji Pallonji Group's debt issues are being handled appropriately. They own 18.4% in Tata Sons. So do they get the kind of liquidity that they need to clear their debt? All of these conversations are still going on. Tamanna, back to you.
All right, so that's going to be interesting to watch out for. I reckon one way or the other, Tata Group stocks are going to be in focus. There's a listing, Tata Capital listing. Tata Motors demerger is the date is 14th November. Then all of this business about Shapoorji Pallonji wanting Tata Sons to list, and then of course the extension of N. Chandra. Tata Group stocks, are they, apart from all of this news, Parag, let me start with you. Are they looking interesting to you?
So basically, first of all, I would like to comment on Tata Capital because it is going to list today.
Yeah.
So there will be many people who would want listing gains but will not get, and so they might sell. So that would be a good buying opportunity for long-term investors, in my view. Suppose if it falls below.
You're saying that the listing gains will not be there?
Yes, the premium market suggests that that it is one rupee negative, in fact. So it's okay. So I would say it's a large IPO. So one would have imagined this kind of thing. But I would say that based on the prospects of the business, this is a Tata Group company which can grow EPS by 25 to 30%. And so I would say that from a long-term perspective, and the way my view on economy is, which is very positive, and the way interest rates are falling, NBFC being in NBFC sector, and they have many operating levers also. Because they have 1,500 branches and now they are going to digitalize it. So OPEX to asset will reduce.
You would say Tata Capital at a discount to listing price today is a buy? Is
a buy from long-term perspective, strictly from long-term, because the equity is too large. The market cap is 1,37,000 crores. The offer itself was 15,000 crores. So you will take some time to make money on it. But I feel, based on whatever I have read about it, I think the second half results will be very good for this company. Because one is AUM growth, which is 20 to 25%, EPS growth will be 30%, and who would not like to buy a Tata Group company growing at 25-30%?
Kush, what about you? Let's start with the indices.
No, not so easy. You don't get off so easy after a terrific event, like the one we had on Friday. Yeah. Genuinely, guys, you have my gratitude, not just for inviting me there and letting me be there in person in the company of these stalwarts, but because this is what we needed. In fact, this is what the markets needed. We needed to hear them just put things in context. I'll share some of my key takeaways, but just, if you guys could share a quick one or two takeaway from, those conversations that we had, what would they be?
I think Muchhad Panwala's upcoming IPO has obviously gone viral.
The superstar, yeah.
But even the debate, and such a constructive debate between stalwarts like Ramesh Damani and Manish Chokhani on whether there is an AI bubble or not, I thought was very interesting.
Yeah. Or gold, for that matter, and whether gold is overvalued or no. But to my mind, I think the piece around the ovarian lottery and the fact that if you're born in India, and think of if you're born 5 inches here and there on the GPS, what would have been. I'm not saying that those fates are bad. I'm just saying that our fate is good, that we are in the right place at the right time.
Absolutely. Parag bhai?
Yeah, absolutely. So I think it was a great event, and as usual, Manish Chokhani, Ramesh Damani was the best discussion I heard. And it was very good to hear Ramesh Damani's views because he was the first one to call out after the Trump came in that there will be volatility and it is not so easy. Yeah. Although markets have rallied because of liquidity and all, we can all argue that still US markets made all-time high before this China thing came up suddenly on Friday. But I would say that, so I have huge respect for these two guys, of course Nilesh bhai also. And so it was a great event. Full marks to you guys.
Yeah, so perfect.
To all of us.
Yeah.
Yeah, all of us. Yeah.
So those conversations and the one that we had with Nilesh bhai, towards the end. So for me, some of the key takeaways, and this is, I think the first one for me is the most important, that this year of consolidation is actually healthy. I think they even used the word bubble for a brief bit, that if we didn't pause or if we didn't consolidate, we'd probably be in bubble territory, and this is a healthy sign that we're consolidating. Even I've been saying that for the last 4 years, we've been on steroids practically. 1 year of consolidation is healthy. That is one. The other thing was be where the government is in terms of investing, right? So be it rare earth, be it shipping, so some of these ideas. And the last one on a slightly lighter note, Nilesh bhai just proved what Game of Thrones fans will realize, what Ygritte told Jon Snow so famously, you know nothing, right? He kept asking question after question, ye kisko pata hai? No one in the room could raise their hand and say, haan, mujhe pata hai ye wala. So that also. So there is so much to learn even now, right, for all of us. Yeah. So that.
In line with what the rest of Asian markets are doing, we are starting off weak. The US futures being in the green hasn't had the desired impact. Yes, we could have opened up a lot worse. We're not doing that. Let's see if we pick up steam. But this 101 points downtick seems not like a chalawa, but like an actual open, simply because Asia is soft. What do you do in a scenario like this with a short-term trade now? Kush, what's the view for the day or for the short term on the Nifty Bank? So
I'll tell you something interesting. Load mat lo. For a very simple fact. 7 sessions, 700 points rally on the Nifty, 100 point ka pullback is not so much of a worry. In fact, just forget whatever happened, on Friday evening, Trump ne kya bola and all of that, right? If you look at data, remember we've been talking about 25,250, 25,300 zones. If I stretch that a little, being the resistance zone, Nifty, halted its rally there. PCR has spiked from 0.85 to 1.32. Call option base at 25,300. As I said, 700 points rally in 7 days. In a nutshell, what I'm suggesting is that, there was already this run-up that was built in. Indicators were starting to show mild overheating from a very near-term perspective. So this, pullback was very much on the cards. May not have been 100 points, maybe would have been like 50, 70 points. So I'm not too disturbed about this, pullback. In fact, it's healthy. For the last 3 sessions, I remember we've been discussing one thing, that if you get a pullback towards 25,000, towards 25,100, that's a good zone to buy rather than chase momentum, because 25,250, 25,300 is a resistance zone. So that view is very much intact. Any pullback that you get should be taken as an opportunity. Right now, the only mild concern that I have is if you buy at a 100-point gap down, it's still at 25,150, 25,200 range, and the resistance of 25,300 will not give you a good risk-reward ratio. So in fact, if this slides a little further also, don't be disturbed. The major support zone of 24,900 and 25,000, very much intact. It's a buy on dips market. I would still prefer a buy on Bank Nifty. On Friday, Thursday, we discussed 56,600 and 57,000 as as the target zone. The first or the lower end of the target zone was hit. If you get another 300-400 points pullback, consider a buy on Bank Nifty. Strong positional stop loss at 55,500, but from there on 56,600 yet again and 57,000 and higher levels very much on the card. So I would prefer a buy on dips on both. Preference towards the Bank Nifty.
What about picks, top picks this morning?
Yes, we're going with both the calls. On the long side being Monday, the weekly pick this week is CESC. Again, the stocks had a good run, supports being respected, but the last 3 days it's had volumes which have clocked more than the last 20-day average. So volume action also fairly healthy. So on the upside, 179, 187 are your targets. 164 is where you place that stop loss. The second call is on India Glycols. Here too, we've had a good run, mild consolidation, but the last two sessions have been very healthy. Friday, the stock closed, at the high point of the day or close to the high point of the day. So that again, from a technical standpoint, is a healthy sign. 960, 985 near-term targets. 915 is where you place that stop loss.
Interesting. Parag bhai, can I come to you? It's 9 a.m. and we'll get to the market. Actually, can I just mark that and then I'll come to CESC and the power companies with the new CERC norms and what does Parag bhai think about it. But the markets, just the initial ticks and they'll be all over the place. Doubt it'll be 2% downtick on the Sensex, but I also doubt it'll be a 0.2% uptick on the Nifty. So let's wait for these rates to settle down a little bit. There'll be some tick in the red. Let's see how we fare post that. But just because we were talking about power and Kush mentioned CESCs and a bit of an uptrend, good volumes, etc. The CERC norms or the proposal norms, right, probably lend support to some of these power utility distribution companies. What do you think about those norms and CESC if you track it?
So basically, Tata Power is the one which I'll go with in that pack because see, anyway, Tata Sons listing is in the air. At least there are. There are discussions around it. Tata Sons IPO, if it comes, there's a value unlocking opportunity for many Tata Group companies like Tata Chemicals, Tata Power and Tata Steel, which hold meaningful, not meaningful in terms of percentage, but in terms of rupee value terms, they hold stake in Tata Sons. So that thing also might catch up. So along with this CERC norms, which are positive for distribution companies like Tata, because Tata Power also has a distribution. And so I think that combination will work for Tata Power.
Okay.
I don't own in the portfolio, but I would say that I own Tata Steel in the portfolio. But I would say that Tata Chemical, Tata Power and Tata Steel might remain in focus.
But not CESC. You think Tata Power is a better
So CESC, the only problem is again same that I have seen it at much lower levels. So I don't want to. But yeah, of course, because see, it was 65 rupees some time ago. And now it has rallied a lot. Of course, this group has a huge expansion plans and they also want to create good market cap. So,
okay. Kush, since you're talking about Tata Group companies, very quickly, a view on Tata Communications. Big mover last week. Can it continue the momentum?
So, again, this is one of those stocks that I personally don't prefer, but just on technical basis also, I would suggest a wait and watch kind of an approach because the run-up has been very sharp and the Friday move has been, after a good bump up, rather, an extended one. It didn't hold on to the highs of about 1947 odd levels, came down. I would suggest a buy on dips kind of an approach. 1770, 1800, those are the levels where you could perhaps consider accumulation because right now it's overheated. At the moment, I wouldn't suggest a fresh buy.
Okay, some movers early on. The ED has arrested the Reliance Power CFO on Saturday. Look at that stock this morning. Bless you, Neeraj.
Thank you again.
Look at that stock this morning, about 19% down. Look at what's happening with BLS International. We marked this as some pain point because the government has now barred them from any international business representing the government and for visa issue, etc. for the next 2 years. They're saying it's only 12% of revenue, will not make too much difference. Like I mentioned in the morning when we were talking about the watch list, the street is not going to look at it well. I want to see what's happening to Muthoot Finance. Authorities summoned the MD in a case on SREI Shrey, and they put out a statement saying that there is no impact and this was only to look at what are the NCDs that we have issued. Nothing much happening with the stock right now. So some of these are going to be in focus. On the winning side, and just to look at some of the big winners this morning in the markets are Tata Chemicals. So we've been talking about what will happen if there is a Tata Sons IPO listing and which are the holding companies or which are the companies which will really do well. Tata Chemicals is one of them. I think a surprise stock on the gainers list is Avenue Supermart, and we talked about this morning that even though the numbers on the face of it are not great, the margin contraction pace has reduced. Is that a silver lining that the street is watching? And it seems that perhaps it is. If any of you have looked at the Avenue Supermart numbers and have a view.
I have seen the numbers. So PAT growth was hardly 4%, EBITDA growth was 11%, revenue growth was 15%. It seems that market just wants to buy the stock. It is simple, very simple.
The pace of margin contraction,
700 crore PAT in a quarter, okay? If you annualize it, 3,000 crore. Next year, say 20% growth, 3,600 crore. Market cap today is 2,90,000 crore. Right, so it's a great company, super promoter, everything is fantastic. But the point is that market says that okay, margin contraction has bottomed out. Okay, that's a.
So I mentioned it this morning. Is that going to be that silver lining?
It can. But the point is that see, so many stocks are just I would say out of my circle of competence. I would not like to say head.
Sorry.
Because people are buying, I have to respect that.
This green you're seeing is the pre-open session. It's very volatile. This is not a verdict that stock is doing well or people are buying or not. We don't know yet.
And people might buy also.
No,
who can stop people?
No, shouldn't. But just one quick thing before you get to the brokerage piece, right? It's been 4 years since Avenue Supermarts has eclipsed the trading price last achieved 4 years ago. And if you think 4 years is too long, imagine Wipro, which consolidated for a period of 13, 14 years,
Absolutely.
right? So it's not unheard of. Look at that 5-year chart and you will see Avenue Supermart has not eclipsed that peak that it reached 4.5 years ago. So please be careful.
Yeah.
That's the problem with buying very expensive stocks.
Yes.
Even if they are very good franchises.
Yes.
It's a great franchise.
Yes.
You and I, everybody use it. But
and today also there are many other stocks in other pockets where we are seeing the same situation. There is an earning momentum, so people are chasing them like like never before. Can this 30-40% growth sustain for 5 years? Hardly. There are many disruptors who will come again and disrupt their businesses.
I'm just going back to what Nilesh Bhai said at NDTV Profit Ignite about dinosaurs with their tail on fire. I'm not saying that for Avenue Supermart. I want to make it very, very clear over here, caveat. But just in the context of what we were saying about large companies and valuations that are not making sense. Okay, I'm going to go to Hiral first on the big brokerage call, and then I'll talk about CE Infosystems. Hiral, what do you have on the big brokerage call of the day?
Tamanna, for that, we're talking about a city on KFin Tech, and this is a double upgrade that's coming in for this counter. They've actually upgraded the stock to a buy. Now, what they're talking about right now is the positioning in terms of the mutual fund business. That is very strong, and the company is actually scaling its non-mutual fund business as well. They have a target price of 1,215 on the counter. It's an upside of around 15 to 16% coming in there. The mutual fund inflows remain robust right now, and if they extrapolate the first half FY26 flow trends, it's suggesting almost more than 10% annualized flows, which would actually contribute to the equity AUM accretion, and it's almost 60% of the total AUM as well. The concentration-led risk in the mutual fund business is lower as compared to one of the competitors, which is CAMS for them, and the revenue contribution from the top 4 partners for a KFin Tech has been steadily on a downward trajectory, while that of CAMS, so that is another positive that they're talking about. And they are also seeing benefits from lower pressure of telescopic pricing and higher share of smaller clientele. And the key monitorables from here on will be the large client wins over the medium term, as well as the post-integration with Ascent. So all in all, a thumbs up and a double upgrade coming in for a KFin Tech from a city.
KFin Tech, any of you liking? Kush, I'll come to you first.
I like this from the fact that yes, there are green shoots. There are those early signs that we track on the technicals that are starting to pop up, right? But that's what they are right now. They're green shoots. So if you want a high risk-reward ratio, a favorable rather risk-reward ratio trade, this is the stock that you should definitely keep on radar. Where 1,025, 1,030, that support zone has acted multiple times, and the stock's rebounded from there. 20-day moving average taken out. Mild resistance on the upside about the near the 1,100 level. So if you do get a closing above that, it will negate the supply zone pressure, the falling trend line resistance, and then the stock could move higher to about 1,150 and 1,200 plus levels also. Hence the favorable risk reward ratio. So keep an allocation, a small allocation to it, and a tight stop loss at 1,025.
Okay. Do you like it, Parag?
So basically, these are great businesses, like infinite ROC businesses. So good business to track. I have not tracked it very closely. I'll have a look. One thing which we have to keep, we have to be cognizant of in this kind of companies is there are large PE investors and who want to exit. Like here, I think General Atlantic has 23% stake in my view. So those kind of blocks will come up for sale.
Got it. Okay. Well, we're going to talk about a lot of other businesses. Cello World, for example, is one that we will talk about as well. But just want to mark, since the pre-open rates have settled, maybe Tamanna marked it already, but BLS International and Reliance Power are the two which are starting over double-digit losses. Nothing else beyond that having sharp cracks on the NSE 500. That's the point. We're not having some very sharp cracks on the indices today. And there are some stocks which are doing okay too. Tata Chemicals, for example, we spoke about it, about 1.88% higher. Saregama, about 2.27% higher. So there are select stocks which are actually not doing bad at all. So keep that in mind. But Parag bhai, a quick word for people looking to park money, right? Is there something that you guys have zeroed down in your portfolio which might have a musical term to itself, like a cello or a violin?
So I'll say, see, the core bets remain, as I said, financials, and it was very good to hear Manish bhai also talking about financials in your of the NDTV Ignite Day. Because when you are constructive on economy, you have to be positive on financials. They are leverage proxy to financials. So HDFC, ICICI, all those things, we have spoken about it many times. Some of the stocks which we have done some channel checks, groundwork, it came up that Cello World is a company.
Cello World.
Yeah, the current price is around 600.
Ye pen company, not the cello which
Pen
is the
and
violin.
many things, tiffin boxes and many things.
Yeah, the water bottles.
Water
Yeah.
bottles, yeah. So the total addressable market for that company is very, very big. And they are making market unorganized to organized. And plus they are a very big beneficiary of this disposable income getting increased in the hands of middle class. Because then middle class will have an impulse purchase. And that was what has happened. Our channel check suggests in the stores of their company suggests that easily 15% revenue growth looks possible. And in a company which is having ROC of 23%, net cash company, very, very, I would say, hardworking and core promoters, who are hands-on in the company. So I would say that, and the stock price is below IPO price. IPO price was 648, today it is 600. It went up to 900 in between. So very interesting company, and getting its mojo back, at least our channel check suggests that. Same way with Granules, as we spoke a couple of times earlier also. I think that company is also coming out of whatever it had problems, whatever problems it had in terms of that US plant thing. Now their US plant has stabilized, that is doing a good revenue with very high EBITDA margin. In Cello also, for example, some of the products, for example, they are starting a glassware plant where the margins will be in excess of 25%. And once that also stabilizes, it, profit numbers will look even better. Again, with a disclaimer, but it's a long-term pick and it is in my portfolio.
Okay,
already.
that's the standard disclaimer also, that these are Parag bhai's view and these are part of his portfolio.
Yeah.
So
And one has to take advice of financial advisor before investing and invest for long term.
Do your own thing. Just on the point of Cello World and companies like that, apart from the TAM, you have to understand, and this is, I think, Kush also suffers it. The repeat buying frequency is very high because these are all items that kids are going to lose in school. Pen, water bottle.
And these consumables.
He's laughing, but it's a fact.
Yeah.
It's not like you're going to buy one tiffin ka dabba and it's going to last a year. It's going to be 6 because it's going to get lost every day.
See,
or
for
every
example,
few weeks.
FMCG companies have a growth of say 5, 7, 8%. This company has a double-digit growth and about 23% ROC and net cash company. So all the parameters of FMCG company with slightly higher growth.
So is the call that you don't lose your toothpaste, but you can lose your dabba?
100%.
No, just on that point, forget losing. Kids want naya dabba every month. So, it's a fancy thing. Kuch nahi, it's a compass, it's a dabba, but the joy that they get out of that, is something that, as parents, we get pushed to buy. So, that's the only thing to add.
Okay. So, yeah, a whole budget is on that. Okay, we're getting some live pictures coming in, I'm told. Let me see if we can cut to them. Tata Capital's listing is going to be big this morning. You have the top brass of the group over there. We spotted N. Chandra also a few minutes ago, and we'll try and loop those visuals back for you. We've done that big story about how N. Chandra is a shoo-in for a second term, so that's important as well. What is your top Tata Group pick, if any?
No. So I'll hold my horses. Some of the stocks have rallied, some of them haven't. So like the likes of TCS, Tata Chemicals, they are a hold. Tata Communications buy on decline. So I don't have a pick per se on the entire group. It's each stock to their own.
Any one of the stocks that you're liking right now?
No, not really.
Parag bhai, any one of the stocks that you're liking right now for a buy on its fundamentals?
So Tata Steel, Tata Chemical, even Tata Power. Of course, some of them might be in my portfolio, some of them might not be in my portfolio. So it is not. And of course, Tata Capital, as I said on the listing, where if it falls below IPO price.
Very quickly, opening thoughts, Kushbora, and a word on Interglobe Aviation.
Not a bad open at all. Don't look at what the index is showing per se in terms of the number of points that it's down. Look at the internals of the markets, and it's very interesting. 25,200 put option anyway had a very high open interest. In fact, in the openings 5-6 minutes, it's piled on, right? Yes, 25,300 call has also piled on open interest, suggesting that the upsides could be capped, but that's okay. You'll take this consolidation in a very healthy way. So as long as this open interest is maintained, I will take this as a consolidation, and that buy on dips strategy is still intact. I wouldn't go out and buy right now because you're still not seeing that bump up kind of a recovery. So maybe it could be a day of consolidation. So all in all, not worried. An eye on Bank Nifty, maybe some more pullback, 100, maybe 200 points could be an opportunity to go long. Indigo, very interesting setup. The momentum indicators uptick is actually more encouraging than the price itself. There is a gap which gets filled around the 6,000 mark. So I won't be surprised that in this momentum, if that gap gets filled. Just a quick word on India Glycols, the stock that we had discussed this morning. 4.5% of uptick. Both the targets met. Not sure if you really got an opportunity to get into it. If you did, book, and you could celebrate a happy Monday early. But if you didn't, it's all right. You can focus on CESC and RP Tech, some of the other names that we've discussed.
Just quickly, Vari Renewables. Just want to mark that. The numbers were very good. It was on our watch list as well. Highest ever quarterly revenue and PAT. So that is one standout. Vari Renew worth looking at right now to climb that momentum?
No, I wouldn't say now is a good entry point. Let me also put in this data point. The volumes that the stock has clocked now in the first 7 minutes are already higher than the last two full sessions. So volume's already there, the volume-backed move is already there, but you've had a sharp run up, more than about 20% in the last 3 sessions, coming close to the resistance of 1250 mark. This is a time where you book profit. So right now, book partially, hold the rest with 1225 as your trailing stop loss, and then as the stock goes higher, book profit. On declines, you could consider. Right now, no fresh entries. This is the time to take some money home.
You will be hearing from the management on NDTV Profit in about half an hour from now. Thank you so much, Kush and Parag Bhai, for speaking with us this morning.